Hey, folks, welcome to InTheMoneyStocks.com's live trading action video. My name is Gareth Soloway, Chief Market Strategist here. Today's date is Tuesday, February 13th, 2018. Well, folks, I wanted to dissect Lumber Liquidators here. A lot of people have been asking me about this stock as it falls off its recent highs and rolls over. And you can see even today down another 8%. So this stock is virtually in free fall. The question is, where will you get the swing trade buy to buy it as a bounce play? And again, remember, swing trades are trades or investments you take with a short time horizon, usually days to a couple weeks. So if you're going on the long-term investing route, you're holding something for years, right? You buy Microsoft for 5 years and forget about it, or 10 years, or 20 years, whatever. Swing trading is specifically taking advantage of specific quick moves in stocks over the course of days to weeks. What I find personally and why I do it is I actually can maximize my profit 10 to 20 to maybe even 50 times more than long-term investing. So what I'm doing is I'm finding a pivot point. We buy the support pivot point. It bounces 10% in a week or two. We take our profits versus an investor who might have to wait a year or 2 years to make 10% out of that investment. And that's the idea there. You really shorten your time horizon but maximize your profits by being in and out, using technical analysis to profit. So if we zoom out on this Lumber Liquidators, let's look at what we're seeing here. So the stock obviously topped out in kind of late, early fall, late summer last year. 2017, above $40. Since then, it's kind of been in a downtrend, which obviously was exacerbated in the last couple of weeks with the market dumping as much as it did. Now, you can see there was a gap fill right here. All right, so check this out. So this is just a great example of technicals. So there was a gap fill right here. Notice how the stock came down here, hit this level, opened lower, reversed, and actually bounced. So from this low, we'll call it 25 to 24.5. It actually bounced back to 27.5. See, that's the 10% move all you care about as a swing trader. And listen, some swing trades you'll make 20%, sometimes 15, sometimes 5, but the point is, in just a couple days, you could have easily made that spread of 10% and then taken your profits and then looking to buy it again as it comes down, versus an investor who's a longer term player. They might have bought it here too, but look at, they're down on the trade right now while you're sitting pretty with 10% profits in your pocket. So bottom line is, folks, that obviously was a former level. Remember, first hits only. So this is another key educational point. When you're looking to buy a stock off key support, in this case, this is a gap fill, a term you should look up online, but essentially it fills the gap. So you had to close here and it opened the next day up here. So that's a gap fill right there. You only play the first hit of the level. So if you hit it once and you buy it, or you don't buy it, either way, it bounces and you don't play it again if it comes back down, because usually it'll go lower, as you can see here on Lumber Liquidators. So the stock's going lower here. So look, we have a couple of levels coming up into sight here. I see a pivot point here and here and here, just below the even number of 20. And then I also see this. Look at this. See this big pivot? So this was the highest point, and then you came down, you came up again, then you finally broke out on this big run. So this tells me this level right here is going to be your spot of interest. So what I'm going to do is I'm going to put a trend line in right there. Notice how it coincides with an even number. It also coincides right with this little pivot and this low pivot right there. And again, if you're an In the Money Stocks member, or if you have been, you know that even numbers play a key role in the psychology of the market. So right off the bat, I will tell you right now that if Lumber Liquidators continues to sell off, which it should based on the chart, you are going to have a major pivot point at basically a break of 20. So my entry, I would say I'll put my order probably around 1975 to $19.80, right in that vicinity. And you guys see that? See how there's a pivot high there, and that was resistance. Resistance from months or years ago becomes support on the way back down. You could see it work perfectly here where the stock fell into that level and then shot higher and rallied all the way up to the plus $40 range. Now it's coming back in. That's going to be your spot. You got, again, multiple factors. Remember, when you're using the PPT methodology, which is the proprietary methodology we have created here, we've been around for over 10 years. In the Money Stocks has. I've been teaching for 10 plus years in the markets. I've been trading for 20 plus years. What you have to be aware of is that you have factors based in the PPT methodology. So we teach, you look for this, you look for this, you look for this, you look for this, about 5 different things, 6 different things, 7 different things. What you want to make sure that any swing trade you take, you have at least a minimum of 2 factors. Okay, because basically one factor will give you a positive odds of making money, so maybe 60, 65%. But if you get 2 factors, you're at 80%, which honestly is really, really good. I mean, imagine out of 8 out of every 10 trades you took were profitable. I mean, you'd be making millions, right? But then the beauty of it is, if you can get a third one, it ups it to even 90%. So 2 is great, 3 is better. What I see here is I see a pivot point, former support right here, and the even number of 20. Also a chart that's getting oversold. We could even do a Fibonacci. I mean, heck, let's do a fib. Let's see what the fib tells us even. Maybe a fib will even get us a secondary level here. And this is the beauty of what we have here for us. We'll do the retracement. So what we would do is we do from this low pivot down here. See how his double bottom right there? Take that, draw your fib levels up. Fibonacci, by the way, is an amazing thing. Oh, look at this. So basically a 75% fib level right here around 20 as well. So yeah, this is going to be a huge level here, folks. So the $20 Pierce is a monstrous support. Could even be a longer term trade for 30 or 40 or 50%. But in the very least, I think you get an easy 10% bounce out of it off of the 20 Pierce level. And again, with any luck, we could hit this level within literally, I mean, it could be within days if the market sees some selling pressure, especially as weak as it's acting today. And we are down a little in the markets today, but it's very more neutral day. But yeah, you get a good sell-off of another 500 points in the Dow or 1,000, easy that it's going to hit that level. So that's a good one, folks. So bottom line is, I hope you found this very educational. I showed it in my last video today, but I wanted to show it to you guys again. I'm proud of the performance here at InTheMoneyStocks.com. My partner and I, Nick and myself, we go out of our way to give our members the best trades that we're taking live. You get all that information in the Research Center. And again, just to show you here, folks, here's the Research Center track record. And again, it's kind of annoying because it pops up. But bottom line is, here you have the Research Center track record, and this is the track record. Every trade I've taken and closed out in 2018 thus far, this is it. You can see a couple losers, but look at the net gain, 104.6%. And again, that's all of them added up. So let's just say you were a very conservative investor and you only put 10% of your portfolio in each trade. You would actually be up over 10% for the year. So basically in 6 weeks, you'd be up to over 10% on your portfolio already, on pace to basically make 100% for the year. And remember, put that in perspective. The average investor is negative for 2018 thus far. They're negative because of the big dump that we've seen. So I mean, just like the average investor might be down 7 or 8% for the year. You're net plus 10% being conservative. That's awesome. I mean, that is just stellar, folks. So again, if you want, just go right here, Research Center, click on it. Go down. You have a 7-day free trial here. You get everything that's included here. You get the No Hype Live broadcast where you come in, see our charts live. You ask us questions. The hot charts and alerts. That's any trade we're taking. We're putting it out to you guys with our exact entry time stamped, with our stop, our target. Daily market reports. My partner does that. He gives you key levels on gold and oil, the bond levels. I mean, everything you could possibly want to know on the S&P and so forth, and his projections. And the daily analysis video, which I do, which is a daily video, usually about 15 minutes in length. At the end of every day, it's posted on the end of every market day, and you get all the insights. We go over the charts in the video. You go over everything you need to be able to trade the market, specific keys about the market, what to expect, projections on stocks, everything you could possibly know. So bottom line is, guys, you got to get involved here. Get involved, take the 7-day free trial, and start participating in the awesome investing trading market that we have. Have a great one, folks.